This is an in-depth analysis on the USO and XOP topping action during OPEX. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at XP Realty, aka the Trading Agent, and this is an in-depth analysis of the USO, XOP, oil trade, whatever you want to call it. I wanted to let people see kind of through my eyes what a top looks like and how it could be playing out. Now, again, anyone who's been following knows definitely early, timing-wise, has been a problem because busy and whatnot. But now that you can see the capitulation, you can see the mindset of the folks who are puking the highs, potential, or chasing highs and also puking shorts at the highs. And so one of the first things that I like to think about when I look at price action, picking a top, trying to think about what's going to happen is what's going on around you. First of all, it's OPEX, CHOPEX, options expiration. You typically see tops and bottoms during OPEX and window dressing first and last three days of a month. We're currently in OPEX. I know it's only Monday, so it's pretty hard to assume maybe today would be the top in the USO, but I'd like to show people kind of what I'm seeing. Also, keep in mind, if you're new to the channel, please subscribe, check this out. There's a lot of content, a lot of teaching. We're constantly posting ideas and trying to give people, an edge into how to handle the markets because they are going to be volatile. This action is not, the market's not going to bottom quickly because the Feds are in a pickle. I mean, I've posted this chart multiple times for people. Just so that they kind of understand what I think is the problem with the Feds currently is that they have a really tough decision. Runaway inflation and liquidity crisis, government defaults on debt, or they have to crash the market. Knowing that the Federal Reserve members were forced to sell stocks, it seems very likely that the easy choice for them is to let the market drop. That can pull the liquidity out. All right, let's get into it. So when you're looking for tops and bottoms and action and all sorts of stuff going on, you have to be aware of the sentiment. That's always one of the first things you need to gauge. Think in your mind right now what's going on in the world. Like, you can't find a legitimate oil bear, right? At the lows, keep in mind, let's zoom back in time to what doesn't seem like that far long ago, COVID bottoms. You couldn't find a single bull in oil. Keep that in mind. I mean, literally, you couldn't. So think of the market makers. Think of the reverse split on the stock. Just think of the action here. Pulled in unlimited oil supply and oil service names and oil stock, right? Can we all agree on that? At the bottom, the market maker is able to collect unlimited inventory on a wholesale price. Wholesale price meaning discounted, heavily discounted. Like, oil is never going to sustain at negative futures prices. Let's just be honest, right? Every time everyone says the end of the world's coming, it typically doesn't end. It usually just is a bad period that has to resolve out. So where are we at now? Look at what's going on. We talked about the Ukraine-Russia issues being a great opportunity for the market makers to unload that oil, right? Clearly they did. Doji, look at the volume spiking. Now what do you have is multiple retest. Well, one of the things that I talked about in the Discord room is looking for the gap and trap. Gap, here's another gap, and again, it can take a couple days. Here's the gap. Well, we're during OPEX. Now let's look at the 10-minute, because I'm starting to see, like on my phone, just some little subtle indicators of what's going on. Let's start this out. Zooming back in time. All right, the closes. You're getting very tight capitulatory, not capitulatory, like high volume closes with small candles. Remember what I always tell people: small candles with big volume are red flags. Red flags meaning, think about it, like a small candle with big volume has to make you aware that something is not right. And that's where you're trying to look for the biggest volume candles. I think you can see it better on the XOP. But think about the open this morning. We kind of talked about it, kind of popped, flopped back. Here again, you popped, you had a long wick. Saw that earlier. Said, that's interesting. Again, another super long wick on a spike up. Now, I'm getting tons of calls and tons of people texting me about, hey, this oil short just doesn't seem right. I've got to go. I'm gone, which, again, if you got to do it, I trust me, there's nothing wrong with taking small losses or getting out of a trade and coming back into it later if you feel the need. The thing about that's interesting about oil then is if you look at, again, the longer term charts, and you can see it, a lot of this in the XOP, and maybe you can see it in the 5-minute charts, but again, I don't want to zoom in too tight. You don't even need to really think about it too hard. When I showed you those candles, like the headlong wicks, you get these big pops and you instantly pull back. So it was almost like a squeeze to sell into. And notice again, markets are right, like this stuff is just rising on dying volume. Keep in mind, that was the capitulation point. This is the chop out. We've talked about this on the 120 chart. Let's see if it pulls up right. What do we say? Like you had this box in here where you can kind of pull it from the volume at price zone. Here you go. We're looking above it. Now again, if you want to see a real breakout, what's happened? Every time you get up there, the volume dies and fails. Volume dies, nothing. I mean, again, just in general, this whole action for months has been petering out. So let's check out the XOP, because this is where, you know, you can really leverage this, and we've talked about this. Like the XOP is going to peak before oil. Like typically the miners, drillers, exploration stocks in a particular sector will always lead the commodity. Just keep that in mind, because these companies and the management and the people who are in the know really see the long-term fundamentals better than you or I can ever. What do we notice? Like you're nowhere near the old highs of 148. We're at 138. Check out the 10-minute as we get up here to the 0.618. Very, 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 like a lot of people seem very confused, right? And some interesting candles again you see on the 10-minute. You get these pullbacks on bigger volume. Getting these pullbacks on bigger volume, coming off the high, bigger volume. Then you see like this green candle, you're like, oh, that's bullish, and you go, oh nope, that's a tight green one. You can tell someone's distributing up here. Again, here you go, gap up at the open, instantaneous flop. I mean, again, as I always tell people, VPA is not a signal to jump all in at once. It's just trying to follow what the whales are doing, and I would argue the whales are distributing up here. I mean, somebody literally has the ability to, oil is making new highs, right? Oil's like not making new highs near term, but just, or long term, but chopping its way up. Why is XOP seem to have a lid on it? Well, then also too, you think about the XOP where it's at, and I've showed people this constantly. It's at the 0.382. It's at the 100-month and old IPO price. Keep in mind, I mean, this ETF was in the 20s and 30s. Now it's at 130. Now you have no set, like unlimited buyers of people who are just reading headlines. This stuff is very hard to pick in tops and bottoms at times. And I tell people that, like, that's where you feel or bet, small bets. You just kind of see if the price action is right. And you expect retest. V's, bottoms, and tops are not normal. It's usually M's, W, head and shoulders, tops. Well, what is this formation? I'd call this a top and chop. Like you had the peak blowout of the channel. Remember how we talk about nice smooth uptrends end with blowouts of channels, right? Nice smooth uptrend ends out of a channel. Here, do you want to see a classic example of that? It's Tesla. I've talked about this a bazillion times. If you're new to the channel, check it out. Nice smooth channel, blowout top, bam. Then you made a lower high, fail, lower high, fail. So this is a bigger chop pattern technically, but it's a similar action where you kind of held up at the highs and then it flopped. That's what I'm expecting in oil. That's my interpretation of it. Again, nice smooth channel, blowout on news, chop, chop, chop. Now again, the news just seems endlessly bullish. That's what you usually see at tops. You see that at bottoms, where it's endlessly bearish news. Gold going to the floor. Oil's never going to be used again. Think about 2020 in March and April. Do you remember the headlines? Oil is done. We're going fully electric. Oil is dead. You're never going to need it again. You're never, like think of like the rationale of the news and the media as it was getting to the lows. Well, now flip the script. Now at the highs. What is the never-ending news flow on oil? Bullish, bullish, bullish. Supply constraints. I get it. I mean, all this stuff is real, but you have to remember, high prices bring on what? Future supply. The market's a discounting mechanism. So we'll see what happens. Remember, this is CHOPX, OPX. You usually see tops and bottoms during this time. And then what? Don't be surprised about blowout action either way. I mean, I've seen that a lot. I've seen that a bazillion times where the position, due to the options game, the market makers really try to stretch the action. Same thing during the end of the first of the month. Like they really try to stretch the action while people are unhedged or hedging. Because keep in mind, like OPEX, like the major OPEXs, people tie their past big options bets to the strike price. Well, think about what if they had puts blown out. What if they had calls? Well, don't you think it'd be really nice if they could get people to chase more calls into OPEX? Again, Monday, Tuesday, turnaround Tuesday. These are all the things you have to be thinking. And then ultimately at the end of the day, if you've gotten this far in the video, then you realize no matter what, your stops are the best solution to any of this if you're unsure. Like if it's creating anxiety, stop out, look at it, rebuy, pay attention, whatever. You don't trade it. I mean, I don't care. I just noticed these patterns. And one of the things that we continuously talk about and be aware of is that the market at inflection points will always what? Have sentiment extremes, bullish or bearish. People, again, with the sentiment, like the news will definitely be always pumping bullish. Again, at the bottom, always bearish news. Always absolutely end of the world bearish news, depending on what the name, sector, stock is. And then 3, you start looking for the formations of what the whales, what they're doing intraday. You got to look for that intraday action because, again, think about what they're trying to do. They're not trying to crash the price on their own investment until what? They finish distributing. Now, again, let's end it real quick on the Discord board because I hope you guys, if you've gotten this far, where is my, reference articles. Please study this. Hit pause, go to the Discord room. Link is in the description below. Watch this. The most active stocks require longer periods of time for their distribution. Has oil been pretty active? Yep. Advances will be more dramatic on the upside to attract public interest in order to distribute the ever-increasing accumulated inventories. Was the Ukraine event a great opportunity for them to start unloading and distributing their accumulated inventories? In order to employ ever-increasing financial resource specialists will have to affect stock price declines, or you can actually replace that with inclines of ever-increasing dimension in order to shake out enough stock. Keep in mind, yes, in order to buy and sell huge quantities of stock, exchange members will seek new ways to enhance their sales techniques through the use of mass media. Again, I hope this all becomes very clear to you that there is a process of this. Now, studying the past, studying prior bottoms, prior tops in the market, and maybe they're trades you have been in. Maybe have you ever been in a trade and puked out at the bottom? Did you ever chase the top and get stuck? Take these rules, apply it to that action, and think about it. And then again, think about it from a technical perspective. What are we saying about oil? Nice, smooth sailing uptrend, blowout top. Chop, chop, chop. Now, technically, you've got like higher lows and potentially like a little higher high, but this is the high that ultimately is the most important, right? And so we won't know that for a while. And again, if you have this trade short, you should not wait for 87.50 to stop out or whatever the high is, 87s. No, you should have a plan. So one of the things I talked about too during OPEX was if you had to hedge, you could actually go long this stuff as a scalp, like really quick, like very like targeted. Like, all right, you're breaking over 82. What is that? 23. Well, then it popped $1. Now that's something that I talked about, and again, I made the mistake. I'm human. I can't be around every minute. But the things that keep me in trades versus what keep you in trades. Well, what if depends? I'm up really well for the last 6 months. Is that a rational reason to stay in the trade? No, it's wrong is wrong. However, I have bigger thresholds of pain potentially because I do see the bigger move ultimately playing out, but I've also put myself in a position where I don't have near dated options. I'm not out of the money options, and I'm also using stock. Bigger difference. I have the ability to wait. If you don't have the ability to wait because you've got the wrong dated options, you've got the wrong strike prices. For example, say you've got the XOP 125 puts, you have the wrong strike prices. I don't care how much time is out in distance. When the stock starts to drop, look at the delta, look at the actual variables of the actual pricing of it, and you're going to see it doesn't get any better until you really get under 125. Well, it's at 138. So you need first a crash, then you need the action to continue, which always possible, but let's not assume anything. Let's assume from the price ranges you get in and where you get out that the action is predictable. It's not predictable 20, 30, 40% below. You need to look at it from the point of where you're entering and how far it can go, not how far do you hope it goes and more. Like that's the problem with options pricing and people like playing options. Again, like someone came on the board was like, I'm buying ExxonMobil 75 puts out in September. And I'm like, that is probably the worst trade you possibly could make. And not to be mean, but it's like, I get it. It's near the range lows, but you didn't get in near the highs, and now you're playing the action all the way down here just to get to even, and the premiums were like $3 or $4. So now you really need a price below 70 to even start making money. It's at 91. Do the math. That's a 23% drop. Like, that's not what you're pricing options to bet on. You're trying to get actual dollar for dollar delta and treat it almost as like a stock. Unless you want to buy lottery tickets, fine, but buy something cheaper, I guess. Buy something where you lose $1. I don't know. Anyway, that's how it goes. Keep an eye on oil. I know people are freaking out. Again, I love it when the sentiment flips and people are like, now the price action has made them confident that it can't go lower. But then they haven't studied the past. Again, check the monthly, check where you come from, check where you're going. Now the monthly, remember, keep in mind, this is a deteriorating fund. We've done a huge move, 15 to the 80s. When's the last time oil had big spikes? Right when this ETF was actually created. 2007, 2006 went from 342 up to 900. Remember, that's a 300 point percentage move. Gave it all back. All right, Dan Max, eXp Realty, aka the Trading Agent. If you got any questions, please stop by the Discord room, but also do a little bit of research and be thoughtful of your own emotions. Again, if you can't act at the lows, you can't act at the highs because you feel paralyzed by the action, then you really don't have a plan and you're really gambling. Again, at nature, we're all gambling, but at least be more calculated. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.